Hello, everyone. I'm Rob Smith of Smiths in the Black, and very excited, especially if I get to talk to people that's never heard of me or the Strat. So if you're on Twitter, I'm at Rob in the Black. We have 48,000 followers. Thousands of people trade what I'm going to show you today, and very excited. If you've never heard of it, after this, you can Google my name, Rob Smith, hashtag the Strat, and check about all the information that's there. But I wanted to start out with a little bit of history about myself. I've been full-time in this business since 1989. I was a full member of the Chicago Stock Exchange for 16 years, where I was a specialist and traded my own account. Since then, I developed what was now known as the Strat. It took me 20 years to do it. But what you're going to see is how we can clean up your trading and simplify things to where you don't have to use all the indicators that people have been told you to use, because I've been through this a long time, obviously. And one of the things you got to think about is that almost everybody loses that trades, right? Who sets out to trade for a living, almost everyone loses, right? That we know that's a fact, right? But there's so much information out there on how to make money, and yet people still lose. So the question is, what is the problem? And so in London in 1854, there was a cholera outbreak, and they couldn't figure out what was doing it, right? And so they finally did a map of it, and they figured out they're not breathing it in, it's in the water, right? And so that was the one commonality they all had, was that they all drank from the same well. So if we look at trading, what's the one commonality of all traders? Technical analysis, pretty much, right? That's got to be the problem, because you have people from all walks of life, all countries, both sexes, and all that kind of stuff. It has to be the problem. So how can that be a problem? And if you're making money doing that, don't get upset, all right? It means you're managing your risk properly, right? And don't stop doing what you're doing if you're making money. But what I'm going to show you today is going to give you a lot more confidence, because you're going to know exactly what's happening. Because if you look and you go through things, you'll hear stuff like Fibonacci, right? Now, if that were true, if that was true to price action, you could take every move that's ever occurred and show the fib numbers on it exactly, because math is an exact science. I'm gonna say you probably can't even do that once, right? And so that's not possible. Otherwise, every move would be shown that way. So is it possible to know about every move ever? I'm like, yeah, it is. I'm gonna show you in just a second. So then there's chart patterns, head and shoulders, cup and handles, whatever you want to make up, right? What that tells you, that's a Rorschach test, basically, because people are trying to interpret what they're looking at. It also tells you that the analyst is only looking at a single time frame, right? By changing that time frame, the pattern's gone, right? If it's like, oh, it's a head and shoulders on the 5 minute, you look at the monthly, you're not going to see it, right? So that tells you that it's not complete information, right? And it's a guess. It can still go up, price can still go up or down, right? Or sideways, no matter what you think you see, right? That's true. Otherwise, it'd be really simple. All you have to do is break out your little pattern thing and off you go, right? We know that's not how it works. Also, it's like you don't want to read a chart per se. What you want to do is you're analyzing data, right? Charts are going to be presented to you the way the software wants to, okay? What I mean by that is that if a weekly chart updated on a Wednesday instead of on Monday, it would look completely different, right? It would. Did you know that separate software have their 60-minute start at different times? Some software updates their 60 at the bottom of the hour and some on the top of the hour. And so oftentimes when I'll show charts, be like, how come mine doesn't look like that? I'm like, because you're updating at the top of the hour, right? It's still data. So what we're doing is we're going to be identifying participation groups by price and time. And so when you do that, I can run a scan without a chart and tell you what the market's doing, right? That's what you ideally want to be able to do, is run a scan as opposed to try and eyeball a chart out, right? So then there's momentum indicators, like moving averages, oscillators, whatnot. The problem with those is that price doesn't move, it aggregates, right? What that means is, like, when the price is going up and people will say, oh, there's more buyers than sellers, that's not true. There's always has to be a seller for every buyer. It means that the buyers are more aggressive. They're taking the offer, right? And so the problem with momentum indicators is that it's a physics term. It's mass times velocity equals momentum. So price doesn't have mass. It's not possible, right? It's not possible. It's an analogy. kind of like when a sports team is coming into the playoffs. See, these guys really got the momentum coming into the playoffs. They don't actually have that, right? It's an analogy. It's like they do, but if they did, they wouldn't have to play the game. They just say you have more momentum, you win, right? So that's a problem. That's the only commonality of all traders is they're trying to put all these things together, and it's subjective. So ideally, what we want to have is something that is not subjective and that is universal to every move that's ever occurred, every move that will occur, and every move that can occur. Okay, so what do I mean by that? Okay, where's my mouse? There we go. So here's how you're going to start to see price action in the future. Okay, let me get this chart up for you. So standard candlestick chart. Okay, for anybody new to these, with a red, what red means is that it opened here, closed here, but traded up into there and traded down to there. But that's the opening and close, and the close was lower than the opening. Okay, if it's green, it's the opposite. Okay, that means opened here, closed here. Okay, so when you look at a chart like this, it's very important to understand this. From one bar to the next, there's only 3 possibilities that could possibly happen, right? The first one, we call them 3 scenarios, okay? The first is this here. It's an inside bar. It wasn't strong enough to take out the high, nor weak enough to take out the low. That's consolidation, right? We call that a scenario 1. The scenario 2 is either taking out the high or the low of the previous candle. So this here, this candle here, is a scenario 2 down because it took that down, right? This is a scenario 2 to the upside, right? Now, very important. The only third thing that can possibly happen is this. You take out the highs and the lows of the previous bar. Is that important to know that that occurs? Certainly is, because as opposed to regular chart pattern where they might tell you that broadening formation is rare, that's how price discovery works. It's the only pattern that can possibly happen because outside bars exist, which means here's a higher high and here's your lower low. On a shorter time frame, this is a broadening formation. Okay, and then if you take this out a little, here, you see these two? If this was a 2-month chart, they would be completely outside of all this, right? They would, okay? So now that we know that, what we want to know is by using the, since there's only those 3 combinations, what do reversals look like and what do continuations look like, okay? First, reversals. A 2 up followed by a 2 down. That's a 2-2 reversal, 2 up, 2 down reversal. Okay, that's one way the price can reverse. Another way it can reverse is this. 2 down or up, inside bar, back. That's 2, 1, 2. The other way price reverses, the 3 itself, because it was a 2 up at one time and then got ripped. If you understand just those 3, there's a few other ways it can happen. Both of those are most common. If you understand that, you'll know what reversals look like. All right, you don't have to guess anymore. You can say, oh well, it's high capitulation volume, and it's going to be one of those 2 or one of those 3. How does price continue? 2 in the same direction for 1, right? A 2 in one direction followed by an inside bar, 2, 1, 2, or the continuation of a 3, right? The 3, 2, right? That's how price continues, okay? Because what's happening here is the 2 up here was rejected, right? And got slammed. And when the 2 takes this 3 lower, that rejection is still occurring, okay? So if you knew this, going back, this is a monthly chart of the SPY, you would have known that this is a 2-2 reversal on the month. You would know to get short. You would know not to trade a 1 because you're going to get chopped up. These guys are trying to get their money back, right? Not strong enough to take it out on either side. And then the 2-1-2 continuation down, right? We know about that? We sure did. Did we know about this? Sure did. How about pandemics? Yep. We knew about the 3-2 down. We also know about the 2-1-2 here, back up, right? So we can also get the 3-1-2, okay? So here, outside bar. And what that means is they were willing to pay up and they were willing to sell down. Then an inside bar, consolidation. So then you really want to know who comes out of that, because the magnitude is to take out that or that, right? Because they're willing to pay up and sell down. They met back in the middle, and whoever comes back with more firepower is going to win. That was the upside. And you'll notice ever since then, this is a 2 up. 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 You can stay in that trade, right? Not bad. So the other aspect on top of that, because when you use multiple time frames, monthly, weekly, daily, and 60-minute, you always know what's happening. All right. Is it reversing? Is it continuing on all 4 of them? So that's when I went back to pattern recognition. It's incomplete work. It means single time frame analysis. You always want to look at least 4. So for some people that are really active on day trading, they'll start with these bigger monthlies and weeklies and dailies and 60s, and then you can break it down to 30s and 15s and 5s, because you know what's happening on the longer term time frame to get in. So when you hear people say, I'm going to buy it on a pullback, right? No, you're going to buy it on a reversal after another reversal. And what I mean by that is you had this reversal down, right? And now you have another reversal back up. Okay. So the other aspect that helps us to understand what's going on, right? We want to identify participants by price and time, right? Okay. So let's take a look at UPST. Okay. So let me shrink this one down a little bit for you. This is called time frame continuity, right? There's no subjectivity in what I'm telling you. It's cut and dry. This is how it works. Okay, so here's what I'm showing you is monthly, weekly, daily, and 60 minutes. Okay, we want to identify 4 separate participation groups, right? The monthly group, the weekly group, the daily group, and the 60 group. Now, when you take your candle and you look at this, you'll notice that this is green, which means it is presently higher than it opened, right? For the month, the buyers are more aggressive. They are taking the offer, right? That's true, okay? Now, each week, you come back in. Are they still buying? They are. Anytime you are over this opening, any opening, the monthly group's taking the offer is more aggressive, are the buyers, so is the weekly. Then you come into the daily. Still here? You bet they are. And then anytime that 60-minute is green, it's go time. 4 participation groups are more aggressive buyers, right? Think price is going to go up during that condition? Yep. And so another thing you want to do is also, in this case, it's going into new highs. We prefer to come back through a previous range. Because the 3 bar exists, we know that ranges get tested on both sides, right? That's how you can properly gauge your magnitude. So you can see how nicely this worked. Here, this was a 2 down month. Here, the 2-2 reversal, back up, back into full time frame continuity because it's a new month, right? This occurred over 130.90, right? It's trading 260.270. Did we know about that? We did. And so I think we're talking about Amazon, weren't we? Let's take a look at what we knew about Amazon. So Amazon here, on the monthly last year, here, when pandemics spiked these guys down, here's your 2 down, 2 up reversal, 2, 2, 2, and then shoppage, all right? Now, I was saying how important the outside bar is, right? Because if they're willing to pay up and sell down, they might do it again. Broadening formation, thus the name. So if you take a look at Amazon here, you'll notice this was an outside month. It took out the highs and the lows. Then it poked down as a 2. But once it gets back into here, these 2 became an outside bar of that. Did we know about that? We sure did, right? That was over 3182. Magnitude to take this out, 3434. All right. So if you knowing what I'm showing you, let's say that you're a Redditor, right? You're gonna trade some GameStop. Boom. Now, if you go here on the weekly, when this thing really took off, here, first of all, earlier in the year, did it have continuity going up here? Sure did. Did it have continuity going down here? Sure did. What's this? That's a 2 down, 2 up here. 53.50. I'll never forget the call, right? Boom. This thing jammed up to 184.68. And then went inside on the week to give us the continuation, the 212 above here, 151.53 before spiking up to 348.50, right? So if you know all this stuff, right, there's no more guesswork, right? Did we know about this reversal here on the month? We did. Spikes up, comes back below 197, went down to 158.01, right? Good stuff. As of today, poop. Earnings after the close, I believe. Once again, your outside month, poke down. That's either going to continue or fail and come back through. So when it took this out, these two were looking to become an outside bar of that. Here's your broadening formation on the weekly. It hit that after hours, almost to the tick. Now we'll see if it can get through there. But I can't stress enough how important all this stuff is. So if we go to, we even use macro charts, right? So what I'll do is I'll also use yearly and quarterly charts because all price action is uniform. All price action must adhere to what I just told you. It's impossible for it not to. So once you know that, you don't have to look at charts. You know what's happening. You can say that's a failed 2 potential going 3. That's a 2-2 reversal. That's a 2-1-2 continuation because that's all there is, right? You don't have to guess anymore and say, I think it looks like a thing and these are my 2 favorites and all that kind of stuff. You don't have to do that. So if we go here, so let's take a look at Apple. Apple, if we go to the quarterly chart, what do you see? You're going to see this. The 2 up, albeit red, the inside quarter, boom, over 137.41. Still going so far. Like I said, this can explain every move that's ever happened. So if we go to the SPY, yearly, going back to the 90s, what are you seeing here? 2, 2, 2, 2, 2, right? On the year, going up to the year 99. You go into 2000, it pokes up and then goes red, right? So it was still a 2 up, but when it goes red, it's potentially an outside bar. You would know that, right? From continuity, you would know that. When you were red on the year, red on the quarter, the monthly and all that, you would know that. You know to protect yourself or get short. Because then you got the 2-2 reversal here. 2001, 2 up, 2 down. Then another 2 down in 2002. Then what happened? Inside year in 2003, 2, 1, 2 reversal. 2 up, 2 up, 2 up. Uh-oh, financial crisis in 2008, so below 136.75, 2-2 reversal year. You would have known about that. You would have wiped all these guys out too in one shot. Then it pokes down here, but then goes green on the year here. What does that set up? That sets up a 2-2 reversal year, which it did. Then another 2, then another 2, 2, 2, slight 2. But anytime that was red, you'd know to protect yourself, right? This is a 3, and that's rare. But you got your 3, 2 continuation, right? This selling was rejected and it's kept going. 2, red, know to protect yourself on the year. Nice, 2 you got there, Rob. Then last year was a big outside bar, a big 3. So it's important to know, I'll say once a 3, always a 3 can't not be. Why? Because you can't change that candle. A 1 can go 2, right? And a 2 can go 3, but you can't change that 3. And if they're willing to pay up and sell down, they might do it again, which they did. Last January, we were up. Then they took out the whole year to the downside. Then they brought it all the way back up, right? And now, what do we have this year? 3-2 continuation, right? We do. So by looking at all these different time frames, we know exactly what's happening. We're never taken by surprise. We're never stunned. And like I said with SPY, going back on the monthly, you can see everything lines up with what I'm telling you, right? And then you can break it down by sectors and say, okay, there's something called a simultaneous break. The market and or sectors is going to trade in the direction of the most 2s or failed 2s going 3. It has to, right? And so when I say you can use a scan and find out what's going on, so I can scan for the 2-1-2s on the week, who's going up, all right? So what are we on? Here, DraftKings, Airbnb, Lyft, right? It tells me right there, all I got to do is scan for it. That tells me what's going on. So if you pull it up, what's Airbnb doing? 2-1-2 continuation on the weekly. It's going 2 on the month, right? Is green on the day. Anytime this 60 is green, that's go time, right? Then what we'll look for, like, can you hear the term pullback? You want to look for a reversal back down against this that then signals another reversal up, right? So that's what we call a triangle day out. That means you've had corrective activity, and because we know both sides of ranges get taken out, it took out some lower range, right? And then it's reversing back up for the magnitude to go to new highs, because we know that outside bars exist, right? So if we take a look at something like Roku, really anything, but so Roku, would you have known about this last month? You would. 2 up, 2 down reversal to the downside, right? With the market going up, that's something I'd want to know about. Roku, outside weak, takes out one side, 2-2 reversal, back through the old 3. Where's the magnitude, Rob? It's going to take this out. Did it do that? Sure did. So anytime you have the red day, so the red 60, Roku going down, right? So it's hard to make things more simplistic than this, isn't it? So, but let's take a look at a few more examples, like something like a Repligen. Because another problem when I say that people will be using single time frame analysis, right? Ideally, you want to use the longer term charts and then nail it down, because potentially you're going to have a bigger move, right? Here, Repligen, 2 down, inside, back through the previous range for these 3 to become an outside bar of all this. There's your 2-1-2 reversal, 2, 2, 2, and off she goes and still going. And you can see anytime this thing is green on the week, green on the day a lot, and green on your 60, then it's go time. Every reason to believe that's going to work. The buyers by price and time are taking the offer, right? So also is important when things occur, because what we do by organizing by price and time is we want to have a separate time when these things open. So for any given week, on a Monday, the daily and the weekly opening are the same. Doesn't mean we don't trade. It means we don't have as much information as we like. And in the opening 60, all 3 of those openings are the same, right? And if the month starts that, then all 4. On Tuesday, the first hour, the 60 and the daily are the same. And then the second hour we call the uncoupling. Now we got 4 separate openings. That's something you'd want to know about. right? At that point, I can identify four different participation groups by price and time. So that's something I definitely want to know about. So if you just go to FAS, what did we know about FAS last month? Well, first of all, here's pandemics for you, the 3-2. At this point last year, if you were trying to buy in March, almost everything was a 2 down. You're not going to turn that around. It's a simultaneous break. And what that is, a concentration, right? So in the financials last month, almost everything was a 2-2 reversal back into a 3 here on the monthly. Let me blow that up for you. Here, outside bar, pokes down, 3, 2, 2. These two become an outside bar of that, right? It's true. If they're willing to pay up and they're willing to sell down, they might do it again. Thus the name broadening formation. They get bigger, right? And you can see this looking very similar like a lot of other things. You're going back in time here. 2 up, 2-2 reversal, back to the previous range. Inside bar, 2-1-2 continuation, 2-1-2 reversal, right? And we also had this in XLF. You see? Just like that coupe and all this is how you can properly gauge magnitude. And when things occur matters. What happened? New month. Buyers are gone. They exhausted them. They stopped them out. These guys are gone, but they didn't come back, you see? So you always want to have these 4 time frames up so you know that. What is occurring exactly, right? And there's something we call exhaustion risk. So when some people will say it's going into new highs, it's all clear blue skies. Like, not necessarily. I'm like, we don't know. We have no idea what's up there now. The buyers have to step up. You want them to be coming back to their previous range, right? For one, because we know outside bars exist by taking out one side and then taking out the other side. For two, we're also using continuity in our favor. I'll show you how that works. So let's say, well, let's go back to that SPY. So when you're coming back through a previous range, right? And you have full time frame continuity to the upside, you're also going to stop people out. They've been told to put their pivots on well-known, their stops and well-known pivots are where they got in. So when you have full time frame continuity going your way and you're coming back to a previous range, you're stopping people out. That's turning more people into buyers. It's also removing liquidity, right? So let's say 70 or more is automated trading. Continuity also tells me I'm on the right side of the algos. They're buying, right? And if you're stopping people out, there's not as much stock for them to get, and they got to run it faster. So oftentimes when you come back to the previous range, that move's going to be a lot faster than going straight into the highs. Okay, very important to understand that. So if we can take a look at, say, I don't know, IBM. And IBM, so here on the month, you're going to see this. When inside, blow that up for you. Went inside and went up. This is what we call a rev strat, the reversal of the inside bar equilibrium. That's why it's important. One, you want it to stay out. It hits its magnitude, goes up into here, and then boom, there was your reversal on IBM on the monthly. Now, close to going 2-1-2 to the downside again, right? Not that hard to understand, right? Good. Let's see what else we got for you. Let's go to Tesla's. Tesla on the way up. What's this? Monthly. That's an inside month. Above 168.66, 2-1-2. Then comes back in, another insider. Boom, on the month, right? We know about that? We sure did. We also knew that we had continuity because during the pandemics, yeah, guess what happened? It was still green when we came into, it was still green on the year and the quarter coming into the new quarter in April. Once again, when things occur matters. And like W, is pandemic bad for W? No. 2-2 reversal on the month. Look at this move, right? And these happen all the time. You just got to know what to look for, right? If we go back to SPY, when things occur matters. So what we knew during pandemics, here. Whoops, come on, man. You see this? This was a new quarter, right? So when this started ticking up, you didn't have to wait for the 212 because you had quarterly, monthly, weekly, daily, and 60-minute continuity. The buyers were back here, right? Did we know about that? We sure did. And we also told us to go after things that were still green for the year and the quarter. Shop. Here you go. Boom. Two right back up and off to the races she goes. And then if you miss it, what did I just show you? Rev Strat. Inside bar equilibrium, attempt to take it to the downside, failure back to previous range, and boom, took all these guys out in one shot. All right? It's not that hard. And so once you understand this, one of the great things about it is you can teach your kids because it's not subjective anymore. It's like a video game. So I have a lot of kids that trade this from their parents saying that they're to some extent, they're even better because they don't have any preconceived notions about what's supposed to go on and what this company does and don't even care. I just know what continuity is and I know what continuations look like and I know what reversals look like. That's it. And there isn't anything else and there never can be, right? As I've shown you going back in time. So let me see here. I think I'm getting a little low on time, but what I do is I'm on the headset all day from the opening to the close, monitoring all these setups, scanning, constantly just serving them up and what's going on. Each night, I make a very short video. And what's great about the strat is that we can convey information between each other very quickly because we know what we're talking about. We don't have to sit there with 15 minutes of analysis on one stock. My nightly video is rarely over 3 minutes. Here's what we're looking for, here's the these, and here's the those. Every day at 12:30 Eastern, I do the strat time report where I go through what we're looking for coming into the afternoon, what's working, right? And that's 15 minutes long, and I can pack a lot of information into that. Then on Monday nights, 1 hour after the close, I come back on to coach this stuff to make sure everybody gets it, right? What they're doing, what they're looking for, where we're going, and why we're going there, right? Where's the concentration of signals of what I've shown you, and what's going on. On Tuesdays, I do a thing called the Strat Attack Show where I review what is happening during the week because Tuesday after the close is important because on a Monday, I want to see what they do. What do they do on Monday? They sell them? Do they buy them? Are they selling this? Are they buying that? What are they doing? Then you've heard the term turnaround Tuesday, right? Well, everything is going to get confirmed or negated, whether it's the Tuesday or the second hour of the day or the second week of the month. So I want to see on a Tuesday what they do. Were they buying something? Did they come back and buy it again? That's something I'd want to know about. Did they reverse on them? That's another thing I'd want to know about, right? So that's why I do that on Tuesdays. On the weekends, I make a more comprehensive video going through the broader averages, major sectors and stocks, all the setups that I'm seeing, what's going on. Once a month, I make the macro video where I pull up that scan I showed you and go through the quarterly and yearly signals. Because if you look at something like, people say, the market looks like it's going to crash. I'm like, does it? Because I don't have to look at a chart. All I got to do is this. So let me see who's taking out. Oh, I don't know. Let's go to the quarter. Well, let's stay into the month. Who is taking out last month's highs? Apple. There you go. We're sitting right there. Tesla, DraftKings, all the same names that we're looking at, LVS now. And if you do that on a yearly or quarterly basis, especially yearly, you see almost nobody's taking out the years to the downside, right? That's something I'd want to know about because that's how the market's going to trade in the direction of the most twos and failed twos going 3, right? So during any given month, I'm scanning out who's taking out last month's highs, who's taking out last month's lows. Then once the new week starts, who's taking out last week's highs, who's taking out last week's lows. Every day, who's taking out yesterday's highs, who's taking out yesterday's lows, right? Every 60 minute, I want to know who's doing that, right? Because that's going to tell me what's going on, right? I don't have to guess anymore. I don't have to look at it and anything more like that. So that's what I do. I'm at www.sepiagroup.com. So come and check it out. Hopefully I've enlightened you on this. because once you see things our way, you're going to be, everything cleans up, right? You don't have to have that subjectivity anymore. It's been so important that even TrendSpider software has put these signals in there, right? When I met them, they were stunned. I was like, it's not that hard. It's actually pretty simple. It just took me 30 years to figure it out. But once I did, I've been on the headset teaching this for 10 years now, and not planning on stopping anytime soon, because I've been in this business a long time and I've seen a lot of pain and suffering and people blowing out, and I don't want that to happen anymore. And I don't want the people to be blowing a bunch of $5,000 on garbage 500-page manuals on, you got to learn every signal in the world and here's all the patterns and all the, you don't have to do that. You don't have to do that. All there is 1, 2, 3 in time frame continuity, and that's it. And then once you understand the broadening formation phenomenon, both sides of ranges get taken out, then you know how to gauge your magnitude. Where's it going? It's going up there. Are you sure about that, Rob? I'm like, yep. Let's have a reversal against me. Coop, where's it going, Rob? There was your 2-2 reversal week. Set it right up. And if that works, that sets up the 3-2-2 reversal month, right? So we also want to be forward thinking. So if this occurs, what will happen? What's the result of that, right? That's what we'll say, what's the next 2? What will that create negator do, all right? Because that will tell you if this works, you're coming back to the previous range. Is that something I'd want to know about? Sure is, because look at this. Here's your 2-2 reversal right here on the weekly. Boom. We can catch them on the downside. We catch them back on the upside, all right? And the good thing is when you're right, you're real right. You can see here on the monthly, the 2 up into exhaustion risk. Boom. See you later. What's this? 2, 1, 2 down. Yeah, that's it. So Dave, I think I'm running out of time here, but everybody, thanks for having me. And I hope this changes your life.